what is market correlation? Okay, market correlation is basically when things, let me see it once again if I have my pen over here. Market correlation means that if I have euro dollar, for example, this is euro dollar, right? And maybe I have dollar franc. I'm not writing so much because my mouse kind of sucks again. But market correlation, there are two kinds of market correlation. There's a positive market correlation and there's the negative market correlation. Positive market correlation means that price goes up together and goes down together, right? That means if one goes up, the other goes up. If one goes down, the other goes down. Okay, that is market correlation. Now, that's positive market correlation. Negative market correlation is when one goes up and the other goes down. That is negative market correlation. Means that instead of going together, right, they go in opposite directions. This one you can see is starting to go up and this one will go down. And the moment this one starts going up, this one starts going down, right? So that is negative market correlation. Which one is better? They're both the same. They're both the same. Okay. Rather, within a market correlation, you have anywhere from 0 to 100. To I'm just going to write it here. Yeah, there is 0 to 100 and 0 to negative 100. Okay, super negatively correlated and super positively correlated. Okay, personally for me, I look for a correlation that is above 88%. Okay, whether it's absolute, so whether it's positive or negative, I look for a correlation that is at least above 88%. Right, this gives me just enough, like or you can round it up to 90%. But yeah, usually I look at a correlation that is above, in this case, right, in 90%. Right, I look for a correlation above 90% to help me make my decisions better. Now let me show you what it means. Let me show you what it means to look at highly positively correlated currency pairs. Okay, guys. Now, I'm just checking. Does I am looking at the questions part over here, right? Just checking if everyone is able to knows how to use the question panel, right? To send through questions, right? If you want to test it, you can test it now. You can send over a hi, or it's a yeah, you can send over a hi or anything. So you know how to use the question panel. The reason I'm saying this is traditionally, right? Traditionally, we haven't had much time to really answer many of the questions. Yeah, many of the questions, right? As you know, right? If you've been to any of the webinars, right? It goes so fast. The pace is so fast, and before we know it, everything's over, and we don't have time to answer your questions. So what I recommend is that if you have the chance, ask your questions early. Okay, ask your questions early. I will stop in the middle of the webinar and answer them. All right, I can see Mark, Zotani, Vanita, amongst others, saying hi. It's nice to meet you guys again. Now, highly positive correlation. Right, I'm going to show you one of my favorite websites, and it's called MyFXbook. Right, so all you need to do is search for MyFXbook correlation on Google. Okay, and you see this link over here. You can click on it, right? And yeah, this is the MyFXbook correlation table. Okay, so what? Let me explain how to use this. Right, there's a time frame, right? So you want to look for correlations that are, how strong it is, how weak it is, right? And what's across the past few days, or the past few minutes, the past few days, weeks, or months. So let's just say I want to for today, for the last 24 hours, or for the last week, right? I want to look for correlations that are higher than 90%. Okay, immediately you will see and lower than 90%. Oops, You know, forget it. Yeah, we're looking for correlations higher than 90%. Okay, and negative 90%. There we go. So we look for correlations that are lower than negative 90% and correlations that are higher than 90%. So what this means is that these things that are lighting up are the most correlated currency pairs. So let me explain how it works over here, right? And I'm going to find my little highlighter. Okay, so for Aussie CAD, right, if you're looking at a currency pair like Aussie CAD, obviously Aussie CAD will have 100% positive correlation with Aussie CAD, right? Because they are the same currency pairs, right? You notice for all the other currency pairs, at least the major ones, there is 64, 63, all of it, none of it is above 90%. So not very interesting, right? But instead, right, if you look at Aussie yen over here, right, we notice that Euro Aussie has a very strongly negative correlation with it, a negative 92.8. Okay, same thing with Aussie dollar. Right, look at Aussie dollar. We notice that Euro Aussie similarly has a very strong negative 93.2% correlation with it. So what I like to do is, because this doesn't show me everything, right, I like to click on something like Aussie dollar. Right? And when I click on something like Aussie dollar, this is where I get to see, this is where I get to see what are the top positively correlated currency pairs and what are the top negatively correlated currency pairs, right? I'm going to change this to the past one month. So in the past 1 month, we noticed that Aussie dollar and Aussie yen move really closely together. Same with Aussie dollar, Aussie Sing, Aussie dollar, Kiwi dollar, and Aussie dollar, Aussie franc. Right, these four move really closely together. Top absolute correlation means that it doesn't matter if it's positive or negative, right? So in this case, Aussie dollar and dollar SEK, they had a negative 90.4 correlation. So what does it mean when it's negative? It means that when one was going up, the other was going down, right? So you can see that in Aussie dollar and dollar NOK too, right? One was going up and one was going down. Now, how can I use this to help me? Right? How can I use this to help me? So let's just say we what it means, right? Let me see if I can find it here. Okay, so over here we notice that Aussie dollar and Kiwi dollar have a 93.7% correlation over the past 1 month, right? If I'm looking at something like 1 month, okay, this is question time. Okay, guys, if I'm looking at 1 month, right? So in this case, the time frame is 1 month. If you are looking on a chart, okay, if you are looking on a chart, what time frame will you use? What time frame will you use? Will you use the 1 hour? Will you use the 4 hour? Will you use the 1 day? Will you use the 1 month? Will you use 15 minutes? Okay, how will you use this? How will you use this? Right. Again, guys, please please participate and answer the questions, because the thinking process really helps you learn better, right? The thinking process really helps you process and think through. Okay, if I realize that Aussie dollar and Kiwi dollar for the past 30 days have been going pretty well, moving together, what time frame would be useful on the chart? Okay, we have answers coming in saying 1 month time frame. Some would say I'll go for the weekly time frame down to the daily, right? Now, okay, so let us that so if it was me, right, I will not look at the 1 week. I will not look at the 1 month. Why? Is because 1 month, for the past 1 month, things have been correlated. If I look at the if I look at the 1 month time frame, each bar is I'm only looking at 1 bar, and that's not going to be very useful for me. Let me show you what I mean. All right, explain explaining it to you might be quite confusing. But let's just look at this. Aussie dollar and Kiwi dollar. Aussie dollar and Kiwi dollar. Oh, man. Okay. If I was looking at the 1 month time frame, that means I will just be looking at one bar over here. This is 1 month. You cannot tell much correlation just with 1 month. You see, by looking at the 1 month time frame. If we look at the 4 week time, if we look at the weekly time frame, we are essentially only looking at 4 weeks, 4 bars, right? See, we're only looking at these 4 bars over here. I can't even zoom beyond 4 bars, right? So, just looking at these 4 or 5 bars over here, does this tell me a lot about correlation? Honestly, not so much. If we look at daily, we're looking at roughly 30 bars, right? Or 20 bars. How useful would that be? It would probably 1, 2, 3, or 5. It'd probably be about like this. This is roughly 20 bars. Is it very useful? Not really, right? If you look at the 4-hour time frame, for our time frame, if you're talking about like the 30th of July and all the way to the 30th of August, June, I mean, 30th of July, 30th of June. Is this more useful? Yes, it's slightly more useful than than the 1 day, 1 week, or 1 month time frame. Okay, so knowing that Aussie dollar and Kiwi dollar were positively correlated, right, for the past one month, I would look at anywhere from the 4 hours to the 1 hour, right? If I look at the 1 hour 1 hour chart, I would let me just if I look at the 1 hour chart, so 30th July would be no 30th June would be about here. Okay, now is this useful for me? It's much more useful than looking at 2 bars or 3 bars, right? So usually a sweet spot I would say is 2 hours, but it's perfectly fine if you use 1 hour or 4 hours. Okay, if many of you guys use TradingView, so how I use let me see if I can remove this. Okay, so if I'm looking at Kiwi dollar now. If you use TradingView, and I recommend you use TradingView to do your analysis, right? And you want to add in a correlation, all you need to do is to click compare or add symbols. In this case, I'll be typing Aussie dollar. I'll select Aussie dollar, and it will be overlaid onto the chart. Now, what can you tell over here? You notice that they tend to move together, right? As it go up, as it go down, as it go up and down, up and then down, up and down, right? So this tells me that Aussie dollar and Kiwi dollar, true enough, they have been really correlated for the past 1 month, right? They have been really correlated for the past 1 month. So how are we going to use this correlation to our advantage, right? So before I touch on that, I do want to show you the meaning of negatively correlated currency pairs. This is euro dollar, and who can tell me? I'm just going to delete this over here. Who can tell me which currency pair is strongly negatively correlated with euro dollar? Okay, guys, I'm seeing some answers come in. We got dollar index, we got dollar franc, right? Anyone else want to take a shot? Which currency pair is strongly negatively correlated with euro dollar? I'm seeing more answers coming for dollar franc. Now, we can take a look, right? We can click on this and we can click on, let's just say DXY, dollar index. True enough, dollar index is so beautiful, right? Can you see it's almost like a mirror image, right? It's a mirror image. As one goes up, the other goes down. So that is true. Euro dollar and dollar index are very negatively correlated. And one more that is negatively correlated to is dollar franc, right? You guys were correct about that. Dollar franc also very negatively correlated. Maybe not as much as euro dollar, but it's still strong enough for it to be for us to see that one goes up and the other goes down. right? So now we're here, right? So we looked at what is highly positive and what is highly negative correlation. What we're going to do next is we're going to use correlation to confirm moves, right? Correlation to confirm moves. Can I get a so-called show of hands? Who here trades breakout strategies, right? Who here waits for a breakout to happen before they get into a trade? Okay, we got Juan Carlo saying that he does. Anyone else trades breakout strategies? Okay, we actually have quite a number of people saying that they do. Mark sometimes, Ola, Moneda, right? Quite a number of you guys trade breakout strategies. So what I'm going to teach you is a nice little trick, and it's called using correlation to confirm breakouts, right? And later we'll see how correlation can help you avoid getting caught in a false breakout. Okay, let's see. Give me a second. Okay, example here. Okay, maybe this example is let me see which example I use. Right, this example. So imagine you're trading the dollar index. Okay, imagine you're trading the dollar index. You know, prices went down, it went up, right? And then it starts to go down, and it reaches this level. You have no idea, right? You have no idea if price is gonna bounce, right? Because after all, this is a very strong level, right? You have no idea if price is gonna bounce or price is gonna break out. But if it does break out, right? So maybe you're a breakout trader. So you're waiting for the breakout to happen, and let's just say one bar starts to break out, and you do not know is it going to break out and then come back in. All right. So that is always one of the most difficult questions you need to ask yourself: is this a false breakout? Right? Is this a false breakout? When you see this, bar, right? When you zoom in and you see this bar close below, is it a false breakout where it might just shoot up? Or do you think it'll go all the way down, right? So this is one of the key questions that people with breakout trading face. Now, how do I use correlation to help me trade this better? Okay, so as we know, one currency pair which is very correlated to let me see, I can line it up properly. One currency pair which is very correlated to dollar index, as you all have mentioned, is euro dollar. Okay, so you can see what I would like to do is I always click on this. I will line it up, maybe two charts on top of each other, right? And I will have euro dollar on top, as you can see over here, my mouse, and I will have dollar franc. No, I will have dollar index below. The next thing I do is I find the level that is correlated. What I mean by that is clearly, if you can look at it carefully. So can you I'm not sure if you guys can see. Oh yeah, you guys can see my cursor, correct? You can see my cursor down here and my cursor up here. Notice that as I move my cursor along the way, the other cursor also moves. So one of the best things to do is probably to I'm not sure how to tweak it, but you want both cursors to be pretty similar to each other. Let me see if I can do that. There we go. See, now the cursors are they're on top of each other. Okay, so this move over here, can you see this big high? This big high over here is equivalent to this big low over here. Okay, so that means the guys, can you guys hear me? Because we got Nigel saying that he cannot hear anything. So I just want to check with you guys if everyone can hear me. Okay, okay, right. So everyone can hear me. So Nigel, I'm not sure if you can hear me, but but it is it's probably there's something wrong with your speaker, right? So anyway, this is one big high that you're seeing. Oh shucks, this is one big high that you're seeing over here, and this is one big low. Okay, so this low comes all the way. I'm just going to zoom in, okay, so it's bigger for you guys. Okay, so what we want to take note of is this breakout over here. So as you can see, since they're moving so closely together, I'm just going to draw a line. Okay, let me see if I can draw a vertical line for you guys. So okay, when did euro dollar, can you take a look at this? Euro dollar actually broke out over here. Can you see? I'm going to zoom in here. This is the level euro dollar broke out. So it closed above and it went higher and it went higher. What does that mean? What does that mean for dollar franc? What was happening on dollar franc at that exact point of time? So we're going to zoom in over here. Okay, let me see if I can line them up nicely. Okay, so we're going bar by bar over here. Okay, you can see that the bars are completely in sync, right? So euro dollar start to break out. Dollar franc has not reached this. Dollar franc has not broken out yet. Euro dollar has broken out of the line, right? What has happened to dollar franc? It is still testing the line. Euro dollar, when one more bar, it has completed its breakout. Dollar franc is still testing the line. Euro dollar continues to break out. That is where dollar franc is still testing the line, right? So at this point, what is your confidence level that there is a breakout on dollar franc? Your confidence level is a lot higher because euro dollar has clearly broken out already. Look at this. This bars has signified that euro dollar has broken out of this big level over here, right? At the same time, for dollar franc, the moment this happens, you know that there is momentum in euro dollar that is going to carry it up. The same way there's momentum in here being able to carry dollar franc down, carrying dollar index down. So that is how you use correlation to really find key breakout levels. Now, I'll show you another example of this. Okay, because so the top one is Aussie dollar, the middle one is Kiwi dollar, and well, I don't like Kiwi dollar, so I'm just going to delete Kiwi dollar. Aussie dollar and Aussie yen. So as we have seen earlier, when you click on Aussie dollar, one of the most correlated currency pairs with Aussie dollar is Aussie yen. And we're looking at it maybe from the past 1 month. Aussie dollar and Aussie yen, very correlated. Okay, so we come back here to Aussie dollar and Aussie yen. We're looking at the 4-hour chart, so it's completely relevant, right? So same thing over here. Now, this is how we use currency pairs that are not almost exactly correlated, right? That means it's not so simple just let me delete this. It is not so simple like euro dollar and dollar index, right? Where it's almost completely opposite of each other, right? Can you see it's almost completely opposite of each other? Aussie dollar and Aussie yen. I'm just going to show you how it looks like over here. Aussie dollar and you overlap Aussie yen, they're supposed to be positively correlated, right? But what you notice is that the correlation is not there all the time. You're just going to use the 4-hour charts over here, right? Sometimes it's strongly correlated, sometimes it's negative, is not as strongly correlated, right? But overall, you can see, over here you can see Aussie dollar bouncing up nicely, but Aussie yen is not bouncing up as nicely, right? You can see Aussie yen shooting up and Aussie dollar shooting up slightly slower, right? So this is a case of correlation that is still above 90%, and anything that is above 90% correlation is able to help you when it comes to trading. Okay, so I'm going to show it to you over here, right? We come to Aussie yen. So just say you're trading Aussie dollar. You're trading Aussie dollar, and there is this big resistance over here, come down, and price is slowly climbing upwards. And price is reaching this level. Okay, price is reaching this level. You're not sure if price is going to reverse or price is going to break out. Right, so many of you guys mentioned that you are breakout traders, right? Honestly, it doesn't matter if you're a breakout trader or you're a contrarian trader, meaning that you play the breakout or you play the reversal, right? Because both of them can be very useful when it comes to trading. When it comes to using correlation to trade. Sorry, running out of breath. So again, today is a very intense session, right? And I think you can see the value in using correlation um, to really filter your entries better. But anyway, we are at this crossroads. Um, is the Aussie dollar going to reverse, or is dollar going to break out? Big question here, correct? So let us take a look at our good friend, right? So I'm going to take this line and I'm going to draw it over here, right? So at this point of line, if you look at, let me just try to line them up nicely, okay? Okay, there we go. So you can see at this line, what was happening to Aussie yen. So this is Aussie yen below, right? Aussie yen has just broken out. I'm just going to add a line, okay? I'm going to add a line. The equivalent where this happens on Aussie dollar, this is what is happening on Aussie yen. Let's take a look. Apparently, for Aussie yen, right, you can see that there is a big resistance, resistance. Okay, at this exact point of time over here where we were deciding if Aussie dollar was going to break out, Aussie yen has started to break out very strongly, right? In fact, this was a big breakout that happened. Okay, so this bar over here, this breakout that happened, is the equivalent of this bar on on Aussie dollar. Can you see? So this bar, like they're both connected by this vertical line, right? So you can see that this bar, this big bar over here, was equivalent to this big bar, this big breakout bar that happened on Aussie yen. So we have the confidence, even if you use a resistance zone, I see if I can find it, even if you use a resistance zone, like all the way up to here, right? You consider the wick over here, you can see that there was a big breakout that happened over here on Aussie yen. So with that knowledge that Aussie yen was able to break out of this big resistance area here, we can have confidence, right, with your breakout strategy on Aussie dollar that this breakout will happen. That this breakout happened, and true enough, there was price was able to, when it came to this big level, price was able to break out instead of reversing. Okay, so that is one key way of using correlation to figure out if the breakout you're seeing is going to happen or is it not going to happen. Okay, now up to this point, right, before I dive further and and potentially further confuse you guys, right, do you all have any questions for me? Okay, I'm glad to see that most people don't have questions for me yet. It means that I'm explaining it quite well. Um, the Joe is asking if the recording is accessible. It is, right. XC Trader will be hosting it on their YouTube. Yeah, there's XC Trader will be hosting it on their YouTube channel. So you will be able to go there and take a look at it. So okay, actually, apparently there are questions coming in now. So Juan Carlos says he'd like to see some exit strategy using correlation. So an exit strategy using correlation. So ultimately, whether at any point in time you're able to tell if the market is going to rise or fall, right? It all depends on the trading strategy, right? If, for example, if I think that, right, if I think, where's my mouse? If I think that the market is going to reverse from here, and I was maybe I bought over here and I was playing the move up, right? And correlation told me that the market might reverse. What I'm going to do is I'm going to get out of my trade. At the same time, right? For me exiting, another person could be entering. Okay, because another person might have his own strategy where he realized that there's a big resistance over here. Correlation is telling him that a reversal is going to happen. And then what you can do is that he might play a reversal from there. So ultimately, it's not about using a specific entry and exit strategy, right? Correlation can tell you if the market is going to break up or the market, there's a higher chance the market might go down. And how you're going to use that, whether it's an exit or entry strategy, all depends on your trading strategy. Okay, for people who love to play breakouts, they would they would use it as an entry strategy. For people who like to play reversals, they would use it as an exit strategy, right? Maybe they'll get out of their positions over here. um so we have a question from Mark. Does one currency pair usually lead the other or not? Yes. So that is how we use correlation, right? Because sometimes euro dollar can be faster. Like in this case, let me see my mouse. Sometimes the leading one might be euro dollar. Sometimes the leading one might be dollar index, right? So it's always important when you're using correlation, right? Is that you need to constantly make adjustments to see which one is the one that is leading, right? In this case over here, at the exact point where we were trying to figure out if a breakout was going to happen, you can see my lines are lining up very closely. Euro dollar was the euro dollar, the one on top, was leading, right? Because it made the breakout already. At the same time, the dollar index, was lagging, right? It had not made the breakout yet, right? So in this case, when you are playing a breakout strategy on dollar index, right, it's always good to kind of look at the other currency pairs to see whether they manage to break beyond their key levels, right? So yes, it's usually one is leading and one is lagging, but there's no guarantee which one leads or which one lags, right? So it's always important to kind of look at the market and adjust to that. Okay, and can correlations be used for indices too? Yes, correlations can be used for indices, right? Just off the top of my head, I'm guessing if we use the S&P 500, you can use some what it can be correlated with is probably maybe the dollar index or the euro dollar, right? I'm not sure. We can figure out here. Um, um, 500. US 500. Okay, let's just look at this. And yeah, so apparently this is the dollar index. So you can see that there is some negative correlation, right? Not too strong, right? But there's some negative correlation between the S&P 500 and dollar index. You can clearly see that, it's not a perfect, like 100% or 90% correlation, but it is good enough to get a gauge. Now, the beautiful thing here, is that when you're using correlation, right, you have all the levels here that are above 90%. So you don't only need to use one currency pair to compare, right? You can use what, one, two, three, four, five, six currency pairs to compare. And imagine if you're trading Aussie dollar and the other five currency pairs have all made a breakout, and you're deciding if Aussie dollar is going to make a breakout, right? What useful information does that provide you, right? That means that means that there's a much higher chance that Aussie dollar might follow and have a breakout. Right. So the beautiful thing is that you don't need to be restricted to just one Aussie dollar and Kiwi dollar, or Aussie dollar and Aussie yen. You can throw in different currency pairs and measure the correlations. Okay, I usually recommend using the 1 week and the 1 month to compare, because when you look at 5 minutes, it's all crap, honestly. Right, 5 minutes. What happens in 5 minutes is just too it's just too what's the word for it? It's just too messy. It's too noisy, right? Aussie dollar and maybe like dollar Mexico. Um, I have no idea. The Mexican peso, right? I have no idea why they are negatively correlated, right? Sometimes it's out of sheer luck, right? They happen to be moving together in the past 5 minutes. That's why you use it as a, that's why they are correlated. But most of the time, this is just out of a complete random occurrence. That's why it happens. So usually try to go for something, not even the 4 hours, not even the 1 day, but try to look at 1 week and 1 month. 1 month is my favorite, especially if you're using the 1 hour time frame or the 4 hour time frame on your charts, because 1 month really gives you really is a sweet spot for you. Okay. Now, so uh, the same way correlation, can be used to call a breakout. Correlation can also be used to help you avoid a breakout, right? So that is towards one of my final points. And now I'm making good time today, right? Is that how to use correlation to avoid false breakouts, right? So in this case, we will use a hypothetical situation, right? So same thing over here. I'm going to just remove a whole bunch of it, right? So same thing, right? Price is coming to here, and we want to see if there's a breakout or price will reverse. So I don't want to waste too much of your time. So because I've explained this concept very clearly, right? If at this point of time, right, the equivalent. Sorry, just let me get it again. The equivalent would be over. Just let me get the correct level. Yeah, the equivalent will be over here for it. If at this point of time, if price instead, let me see if I can click a replay feature from here. At this point of time, sorry, I just need to replay again. If at this point of time, price instead started to reverse, okay, then that would tell me, right, so this is a hypothetical situation, right, where at this key deciding point, Aussie yen, which is positively correlated with Aussie dollar, starts to reverse, right? That tells me that this might be a fake breakout, right? This might, this level, this thing where I'm seeing a lot of strength come before a breakout, it might be a fake breakout as price is starting to reverse, right? So just the same way where you can use correlation to forecast if something is breaking out or not, you can also use it to forecast to see if it is not able to break out.